Hi guys, welcome back to my another YouTube video. In this video, I'm gonna discuss about exam kit question. Okay, so I got a lot of questions, a lot of queries for students, especially who do self-study. Okay, so they have this problem that how to apply knowledge, how to solve questions, because once they read the rules, it's everything easy. Once they read study text or ACCA study hub, everything is very easy. But once they start solving questions, it's difficult. Okay, so in this video, I'm gonna show you how you have to apply the rules, okay, which is the application knowledge. How will you manage your time? How will you do solve questions in exam? How will you do your exam kit? And what are the points? Like, it's not possible for me to do all the questions, right? So I'll teach you. I'll give you the tricks, like by what you can score marks. Okay. So yeah, that's it. Upload it. Okay. So this way, I will cover your revision and your exam practice. Your question practice will also be done. Okay. Now, let's start with the first 50 mark question, which is Gail and Brad Limited. So please pause this recording and open your first question. Okay. And yeah, those who are watching, like whenever you guys are watching this video, I request you to sit with a pen and paper. Okay. You cannot remember all the rules without writing, or it's difficult. So please make sure that you make your own notes and rely on that only. Don't rely on any other notes. There are chances that there will be or there might be some mistakes. Okay. So yes, please rely on your own notes. Okay. So yes, let's start with the first question, which is Gail and Brad Limited. This is the 50 marks question. Okay. Uh, all right. Just a second. Okay, so you should assume today's date is 1st June 2024. Your manager has a meeting with Gail and Father Brett, both whom are clients from your firm. Gail owns the whole of the ordinary share capital of Aero Limited. Advice is required in respect of the corporation tax issues in relation to the disposal of the land and building, extraction of the funds from the company, either bonus or dividend, non-disclosure of the income. This is the ethics part, okay? So those who are there in my WhatsApp group, they know they have covered this already. So you guys don't have to worry about that. But if those who have not, you can reach out to me by any way. I'll send you the task. Okay. So I send task each and every day, and like some task are which takes 2 days or somewhere. So it's fine. But yeah, I send task regularly. So if you're not added, you can reach out to me. I'll send the link. Okay. The inheritance tax consequences of the lifetime gifts. Okay. The following exhibit. This is the okay. So I'm just jumping onto the main part, which I want to tell you right now is Gail was born. I'll read the question again. I'll go through the question again. No worries about that. I just want to see that Gail was born resident and director. Okay. Uh, Gail was born in 1976 and resident and domiciled in UK. She owns the whole of the ordinary share capital of Aero Limited, 100% shareholding, okay, and works full time as a director of the company. A Limited owns the whole of the life ordinary share capital of Zephyr Limited, okay. A Limited, which is Aero Limited. So Gail, so it is like G. G is holding G is holding 100%, 100% A and 100% Zephyr Limited. Right? Zephyr. Z Limited. A Limited and Z Limited both are UK resident trading companies. A Limited and Z Limited both paid corporation tax at a main rate. Okay. Errors including notes. Okay, all right. So yeah, the reason why I'm just going through the question is, I'll tell you. Okay, so to revise a topic, okay, I'm leaving the question here right now. We'll revise it again. Before going to the question, before doing the question, I want you to revise the topics which are covered in this question. Okay, then I'll show you that how ATX is easy and how you can apply your knowledge. So yeah, let me share my screen. Okay, so this is your just a second. Okay, so just sorry. Yes. Okay, so this is your question, Gail and Brad Limited. Gail and Brad Limited. It's Gail and Brad, right? Okay, so here the corporation topics which are covered, I've just copied and pasted from the question itself, nothing else. Okay, so in this question, the capital gains group is covered. Okay, I will cover that. After I covered that, I will give you a task that you will have to solve all the similar questions. Okay, it's doesn't make any sense that I solve all the questions. I'll give it to you to solve all of them. In case you have doubt, you can reach out to me. Okay, all right. So let's start. First of all, let's understand what is a capital gains group. Just a second. Okay, so okay, so whenever you study your corporation tax, there are different types of groups. Okay, but here we will discuss about the capital gains group. Just capital gains group. Okay, so what happens in this? So in the capital gains group, suppose that question was Gail was holding the group. Sorry, I don't know what's happening in the system. Okay, so in that question, Gail was a person. E Limited was holding Z Limited. Okay? It was 100%. So in the capital gains group, the shareholding requirement is 75% direct and 50% indirect. So here, 100% holding, which is directly, which is 100% holding. So this first rule, this is known as the direct relationship. So this first rule is satisfied. Now, if Z Limited holds any other company and Limited, initial Limited, right? So if this holding is, let's say 75%, then 100 multiplied 75, 100%, 100% multiplied 75. Okay, yeah, 75, right? 75%. So here the indirect holding. So whatever the subsidiary holding, whatever the companies the subsidiaries holding, how much the indirect holding this main parent is having. That is known as your indirect shareholding. Okay. So yes, and limited will be a part of the group. Now, if Z Limited holds another company, or let's say A Limited holds another company, which is Malvi, M Limited, okay, M Limited. And here the shareholding is 75. I'll keep 75 for your understanding. And if the shareholding Malvi Limited is holding another share, or let's take any random surname, S Limited. Yes, S Limited. Okay. The shareholding is Malvi on S Limited is 50%. What is 75 is 50%? 37.5. 75% multiplied 50%, which is 37.5. So A Limited has a direct holding in Malway Limited at 75%, but it does not satisfy the another condition of the indirect shareholding. Okay. Now I hope this is clear. This A Limited is the main group, main person. Okay. Not sorry. This is the main company. Okay. Now, in this, those who are individuals, they cannot be a part of the group. Okay. So, in that question, Gail is a company. Gail is owning a company. So, A Limited and Z Limited will make a group, but Gail and Brad will not have any, like, these are not the person who will be a part of the group, and they will not also get any benefit. Okay. Now, one more thing. When there is all these are UK resident companies. Okay? All these, whatever I discussed, those are UK resident companies. Now, let's say there's another company which is J Limited, and that is non-UK resident, which is foreign company. So this company can be a part of the group, whatever the shareholding, the same conditions will apply, 75% direct and 50% indirect shareholding. So this company can be a part of the group, but it will not be able to claim any privilege or any benefits which a normal UK resident company gets. Okay. So yeah, that's all. I don't know why I'm not able to rub anything. Anyways, let's leave it. Okay. Now, what are the benefits of the group company? First one is transfer of assets within the group. So, whatever the transfer of assets happen within the group, suppose not, this is actually A Limited, please understand, A Limited and Z Limited, yes, they are the group companies. So, whatever the asset transferred here means asset sold, that will be at no gain, no loss. But it will include cost plus indexation allowance. Now, this indexation allowance will be given in the question. The thing with indexation allowance is this is freezed after December 2017. So, in case in the question, if the indexation allowance is given for a period after 2017, then please understand that is only for your confusion. You don't have to actually consider that. Don't worry, I'm going to solve this question. So, everything will be sorted. Okay, because Gail limit is a part of this topic. See, last one, right? Okay. So cost plus indexation allowance, at this, the assets will be transferred, but the profit will not be transferred. So at no gain, no loss, the assets will be transferred. So yes, and in case within the transfer of the asset, suppose this asset is transferred at, let's say 1st Jan 2025. 1st Jan 2025. So if within 6 years, this Z Limited break a company or don't be a part of the company, then there will be a degrouping charge. Okay. Now, what is this degrouping charge? Whatever the gain which was not chargeable here at this date when the asset is transferred, thus the asset will be the gain which was not chargeable at that time, that will be chargeable this time. Okay. And if the person A Limited, just in case you might have a query, if A Limited sells any asset to any other company, let's say B Limited, which is an outsider, not forming a group, nothing, an outsider, then the gain will be chargeable. Okay, what are the gain E Limited gets, that is chargeable. Okay, so yeah, let's get back to the degrouping charge. Okay, so yes, degrouping charges that whatever the gain was not chargeable at that time when the asset was transferred to the group company, that will be chargeable at that time. Okay, whenever the company is leaving the group. Okay, So yes, calculate the gain as it would have arisen. No gain, no loss. Degrouping charge is added to consideration received by the vendor company selling the shares in the company leaving the group. Okay, so this degrouping charge is added to the person who is selling, who was transferring the asset. Okay, and unlikely to be taxable as a company selling. Okay, there is one more exemption, which is SSC. If there is a transfer of if there is a sale of shares, we'll discuss the SSC once I complete the whole topic. Then due to SSC, there are chances that this degrouping charge might not be applicable. Okay. Okay. Now, there is rollover relief in one of my YouTube video. You'll only find it. So rollover relief is also not available for the degrouping gain. Rollover relief, we'll discuss it. There is a topic this here. So I'll keep it for here only, or else it will be a confusion. Okay. So yes, if that was a normal asset. Okay. Now let's see if the asset which is transferred, that is a structured building allowance. This topic I have covered in maybe second video of capital allowance. This is a part of a capital allowance. So you have to check that for detail. But I just want to let you know, you can claim a group structure building allowance. Okay. So whenever the person transferred, whenever the person breaks the group, leave the group, at that time, the structure building allowance is not added back. Okay. And whatever the person who gets, like, whoever the person it gets, see, the thing is, whenever SBA is structure building, as structure building allowance happens, so whenever it is disposed, it usually get disposed at the market value, right? But if this is transferred in the group itself, then it will be again at a no gain, no loss, and all the structure building allowance would have been claimed. Okay. And whatever the other benefits for that depreciation, how they consider that, everything will be considered. Okay. So now, if the person, if the company leaves the group, then whatever this SBA is, structure building allowance is 33.33 years. This is a straight line, on the straight line basis. This is the whatever the amount is divided by 33.33. That is on that basis, you have to calculate the depreciation. Okay. But whenever the structure and building allowance is transferred to some other person or other group, whatever the remaining years are out of 33.33, that on that years, on that basis, the depreciation will be charged. Okay. Now, here, if the person, the company which got the structure and building allowance, if that company leaves the group, and that time it will be chargeable the same way, like how it was supposed to. But instead, whenever there's a disposal of the SBA happening, at that time, whatever the proceeds are, whatever the gain was, that will be added back on the gain, whatever the allowance which claimed earlier. If the allowance is claimed, it is deducted at that time, so that will be added back into the gain and allowance claim. Okay. Okay, so that's it with your structure and building allowance. So yes, claimed by the vendor asset is subsequently disposed by the transfer, or SBA claimed by the group is added back to the disposal proceeds. It's the same way. Whatever the disposal proceeds you get, on whatever the gain you get, on that you have to pay for. At that time, you have to pay for this allowable allowance which was claimed earlier. So yes, one thing, please solve these questions. I will post these questions into my community channel. So just let me highlight it. Community, YouTube community. Okay. I'll post this here. Okay. And there is also WhatsApp group. I keep posting on the WhatsApp group as well. So you can watch, like you can get access from there as well. It's fine. Okay. Now let's see reloc. Okay. So now let's start with the relocations of the gains. Okay. Now, what happens in a group company? There's A and Z Limited are a group company. A Limited and the Z Limited. Okay? LTD, LTD. Okay? These are the group companies. Now, if A Limited had a gain and Z Limited have a loss, then they can set off against each other. So this loss can be set off against this gain so that they have the relief and they don't have to pay the tax on this gain. Okay. This Due to this election, group chargeable gains are allowable and capital loss to be set off. Okay, so whatever the capital losses are, they are just they can be set off against each other, thus maximizing the use of capital losses. Okay. So, whatever the use of capital losses that can be maximized in this period, if it's a group company, there's a rule for capital loss that you can carry forward and you can claim it for the current year, okay, and carry back, okay. So, if you keep it for the future years, you don't know whatever the income is gonna be. But for the current year, you will be able to set off your loss against your income, against your gain available, okay. Okay. Mhm. Okay, so yes, and the next is currently chargeable gains are okay. So how will you be able to set off? Currently chargeable gains or allowable losses can be transferred but not brought forward losses. So whatever your brought forward losses, like losses from the previous period, that cannot be set off. But from current year, if you have any loss or if you have any gain, that can be set off against the group. Okay. So yeah, that's it. Now let's discuss about the rollover relief. Yes, so this relief which I was talking about in this first part. So yes, in detail, I'll this already on the rollover relief. A video is already uploaded. So I recommend you to watch that. But I'll just explain in short. Whenever you reinvest your proceeds from one asset to another asset, one qualifying asset to another qualifying asset, then you get the rollover relief. The condition is 12 months. Suppose today is the date of disposal, DP, 12 months, 3 years. Let's keep it bigger so it's easy. So within 3 years, if there is a disposal happening, suppose building A is disposed, and if the investment is happening before 12 months, like from in between this last 12 months, then also they can claim for the rollover relief. Okay. Now, in case of the group company A Limited and Z Limited, in case of the group company, what happens? Suppose A Limited sold a qualifying asset, okay, which is plant and machinery. Okay, so if A Limited sold a qualifying asset and Z Limited invested it, then also they can qualify for rollover relief. The period will be same, the conditions will be same, disposal from the qualifying asset and the reinvestment for the qualifying asset, that too for the business use only. It's not available, for your private use. Okay. Now, in case gain in one company, okay, a group rollover relief not available for the group degrouping gain. So whenever there is a degrouping happening, and at that time, group rollover relief is not available. Okay, it's only available when a company is a part of the group. Okay, so yes, these are the questions which you have to solve. Oh, I'm sorry. Yes. So yeah, these are the questions. So section A and section B. So whenever I start with the section A of this part, these questions I will not discuss about the rollover relief again. Okay. Okay. Now comes the pre-entry capital losses. What happens? Like if A Limited, A and Z Limited had any losses, suppose Z Limited joined the group, okay? If Z Limited had any losses before joining A Limited, those losses are known as your pre-entry capital losses, okay? Now, at the time of joining the group, first of all, you have to identify what are the capital losses, okay? pre-entry capital losses and what are the at the time of the joining. Okay. Now, pre-entry capital losses can only be used against the gain of the own asset, or sorry, own joining group. Okay. So Z Limited joined the group. And it has a capital loss. It had a capital loss on any asset it sold of 10,000, let's say 10,000. And for the current year, Zen Limited only had the gain of 5,000. In the next year, it will have more gains, no worry. But for this period, only 5,000 will be satisfied. But here also, A Limited has the remaining 5,000. Let me make it a different figure. 4,000 gain. So 4,000 will be satisfied. Here it is 6,000. Okay, so together makes it 10,000. So only against the group which had the pre-entry losses, only against that company gain. That too, it should, this 4,000 should not be like within the company. If Z Limited is selling a machine, so it's not allowed machine to A Limited and the gain, that's not allowed. But if Z Limited is selling to some outsider, a machine or whatever the asset is, the gain on that, against that gain, it will be satisfied. Okay? Gain on the new asset acquired from the outside group or the use in the business. So the same way, the use in the business. Okay? Cannot be used against the gain of the other group companies. So yeah, the whole thing I just explained. That cannot be used against this. Now, next comes the restriction of the trading loss carried forward. So I need to maximize my screen. Okay, so what happens? You can say that these are a kind of major change in a company happening. Okay, so what happens whenever a company joins a group at the time, after joining, these are the conditions. Whenever they receive gain from the new group, at that time, that gain cannot be transferred. That is restricted. That cannot be set off. Whatever the gain they receive from the earlier group or the new group they receive, that cannot be set off. Okay. Whenever it makes a gain on asset transfer from the new group, that also cannot be loss, also cannot be set off against that company. Okay. See, the thing is, uh, okay, my dad. Okay. Whatever the benefits he get, he'll give it to me and my siblings. This is the way how you'll remember it, okay? Why would he give to my neighbors? No benefit, right? Or if you take an example of a seller or a businessman, the same way. So if the businessman is, suppose it's a wholesale business, and what are the benefit is, if there is a loss happening, then it will only be a better example. Sorry for that. Yes, let me discuss a better example. Suppose you purchased a, uh, let's say you purchased, what I say, you purchased a food item. Food item. Yes. Now seller A and seller B. When you purchased a food item from seller A, at that time, whatever, if that food was expired, then the seller A will change it. Whatever the benefit you have, whatever if you have losses. Suppose think of in the case of if this is a manufacturer and if this is a wholesaler or let's say a retailer. Okay, whoever it is, let's keep. I just want you to understand the thing. Then why would he give if seller A don't purchase the food item, if I don't purchase a food item from seller A, okay, food item, yes, this is a manufacturer and I am the retailer, sorry. This is the manufacturer. This is the manufacturer, seller A and seller B, and I am the retailer. Okay. So whenever I have any losses, why would if I purchase from the seller A, only seller A will help me, right? For the losses I have, for the gains I have. So only on against the seller A, I will be able to claim, not against any benefit for the if I purchase any benefit, if I purchase the food item for selling it again, then seller B, why would he help me with that? Right? If I purchase, let's say, 100 milk pouch. Let's take example of Amul. Okay. Amul is a manufacturer. If I purchase 100 pouch from Amul, 100 pouches of milk, okay, and the milk is not sold. Today I have 10. If I purchase from the seller A, if the seller A is selling Amul, then only Amul will take the milk. Why would a seller B would take? If I purchase from seller B, why would seller A would do? So logically, I mean to say that the the outside gain, the outside loss cannot be set off against the own company group. Against this, any outsider cannot go inside, okay, or cannot claim any loss or gain. So that's it. Okay. I hope it was easy to remember. Okay. Now there's one more thing. Within 5 years of the changing owner. So if after joining the business, within 5 years, if there's a change in ownership can be a different ways, like changing the shares ownership. Like earlier it was 80%, now it is only 50%. So that is a change in owners, changing ownership and the changing owners. So in that case also the loss is restricted from this period. Like if consider all this scenario happening at this period, and this is the loss, this cannot be carried forward again beyond this one. So this here it cannot be carried forward. Okay, then any trade loss arising before it joined the group cannot be used against the guest gain. Okay, so yes, that was it. Now, let's discuss about the intangible asset. Hmm. Okay. Now, in the case of the intangible asset, there is a similar thing happening. Whenever you purchase or sell intangible asset being a part of the group, if A Limited sells and the B Limited sells, okay, B Limited, these are the group. So at that time also no gain, no loss will be applicable. Degrouping charge will also be applicable if the B Limited is not a part of the group within 6 years of the transfer of the asset, then the degrouping charge will be applicable on it. Okay. And okay, if SSC applied to the share disposal, there will be not be a degrouping charge. Okay, as if there's an SSC shareholding exemption, that was sorry, substantial shareholding exemption. Sorry. So yes, if there's substantial shareholding exemption, we'll discuss it later on. Then again, the degrouping charge will not apply. Even intangible and intangible assets both will. Okay. Now let's see stamp taxes. Assets, whatever the transfer you make within the group, on that stamp taxes is not allowed. Like you cannot, that stamp taxes is exempt. Okay? But if the company leaves the group within 3 years of the duty payable, whenever you transferred an asset, it is a stamp tax is payable on the shares and billing. Okay, so if within transfer of this shares and billing, if within 3 years any group company is leaving the group, then the whatever the stamp taxes which was not chargeable at that time, that will be chargeable. Okay, the stamp duty is payable. So yes, that's it with the group relief. Now I'll be discussing about the substantial shareholding exemption. So why do we have substantial shareholding exemption? So we have one more thing I want to make it clear, that whatever we are discussing right now, that is a part of this group relief and the substantial shareholding exemption. This is a part of your um, corporation tax. Okay, you'll find it in your corporation tax. Okay. You get companies get a substantial shareholding exemption whenever they are selling shares of another trading company at that time they can claim for substantial shareholding exemption. Okay. So what if whenever the substantial shareholding exemption is applied, what if the gain is gain on the sale of the shares? For example, uh, Unlimited, Niche Limited, Malway Limited, and this is okay. So these both are the trading companies. Okay. So whenever N Limited sells shares of the M Limited to anyone at that time, whatever the gain they have, on that gain, there is a SSE, substantial shareholding exemption that is applied. So whatever the gain is, that is wholly exempt, the gain, whole gain. So the payable amount is zero. The same way degrouping charge. That's why if the SSE is applicable, then the chargeable amount will be again, degrouping charge will not be applied. Okay. So yes. But to apply for the SSE, there are some conditions. And limited, before disposing of, the condition is 12 months today, 12 months. Okay. So the condition is Unlimited is holding the shares of Unlimited is holding the shares of Unlimited. Okay. So that this is 12 months today, and this is 12 months, and this is before 6 months. So whatever the shares is, the at least 10% holding should be there within the last 12 months out of last 6 years. Doesn't matter if it during this period the shareholding only was 5%. It's fine. Sorry, it should be more than 10% at least. So it doesn't matter if it was 5% in this period and later on it increased. So it's fine. It qualifies for another, it qualifies for this SSC relief. One more thing that yeah, this last 6 years should also be continuous, and this last 12 months should also be continuously. Okay, it should not be like breaking the period. Why I'm saying about this, because we're gonna read about the BPR relief. That's why in that period you will see, sorry, in that relief you'll see that why I'm discussing about this. Okay. Now, if the shares are held more than less than 12 months exemption, then also the rules apply. Share disposed of are in a new company. So if the shares are held for less than 12 years, sorry, 12 months, and the shares which are disposed, that is disposed to a new company, then also SSC is applied. Trade and other assets of another 75 group company are transferred to that new company prior to the sale of the shares. So before transferring your shares to the another company, you transferred another assets in the 75% group. Okay, that was another 75% group. Trade and assets have been owned by the group for more than 12 months in the last 6 years. But the condition must be whatever the assets transferred, that must be held for at least more than 6 years. Sorry, at least 12 months within last 6 years. The same rule for the assets also. Okay. So yes, that's it. For this, you will do a question. Um, these are the questions. See, Gail Limited is also there. So that's why I was talking about the Gail Limited thing. Okay. Now in the Gail Limited, you'll also see a bonus or dividend. Okay. This question. So whenever a company, whenever a person, suppose I'm a N Limited, Nish NM Malvi. Nishi Malvi Limited is a company. And Nishi is an employer. Okay? Whenever, if I receive salary from NM Limited, if you remember the employment income part, on whatever the salary or whatever the bonus I get, okay, on salary on the bonus. If it's a cash bonus, then employer NIC will be paid. NIC, employer Class 1 NIC. Employee EMPLOY class 1 same NIC. This is on the cash benefit. If I get any non-cash benefit, then it is class 1 ANIC. Okay. But yeah, it's not this case happening here. So let's keep it till class 1. This NIC. Okay. And my personal allowance will also be changed. Okay. If my income increase from if my income is more than £100,000, then my personal allowance will be reduced proportionately. Okay? It is like, suppose my income is let's say 103 3,000, only 3,000. So my allowance will be reduced by 2, whatever the excess amount is above £100,000, divide by 2. So 12570 is my allowance minus 15,000, 1,500, right? So by that amount, this this personal allowance will be reduced. So okay. 12570 minus 15. So 1170. This will be my personal allowance. So that's why your salary can also affect your if you receive a bonus, that can affect your this band as well. Okay. And whatever you for the companies, it is the one rate only. But for individuals, in this question, it is discussing about the individual. So to avoid confusion, let me discuss about the individual itself. So yes, for the dividend, for the individuals, it's a different rate band. But for the if it's a bonus, in case of you received a bonus, that is considered as a non-saving income. Okay. So these are the benefits. Okay. And yes, one more thing. If a company is paying a salary to an employer, then that will reduce the corporation tax. So whatever the you deduct from the profit, right? You deduct the salary. That is a deductible expense. So it will reduce your corporation tax liability. Now for the dividend, the one benefit is it is a less rate payable as compared to the non-saving benefit. NRV is on, you get the nil rate band of 1,000 irrespective of any bands it falls into. Irrespective of any bands your income falls into, you get 1,000 of nil rate band, which means at this there is a no tax at 0%. So suppose there was a bonus which I was about to receive on the 1,000 bonus and on the 1,000 dividend, which is more beneficial. Of course, the dividend is more beneficial because anyways, it will be the wholly exempt. Even if it's 2,000, then also this is the beneficial. But the bad part about this, the thing that this is not an allowable deduction for the company. Okay. And yeah, so that's the only thing why the company might not issue dividend. Instead, they would choose bonus. So in the question, you will be asked whichever is beneficial. You have to calculate it. You have to say it. Let it know. Okay. Now, here, it's just this much. Now there is inheritance tax. So in the inheritance tax, you only have to write down whatever the benefits of the lifetime gift. Okay. So if whenever a person is giving a lifetime gift, if that is a PET, which is potentially exempt transfer, whenever transfer to a person, at that time there's a zero lifetime tax in PET, or in CLT. LT, zero. Lifetime tax, 20%. Okay, if the donor is paying tax, then 25%. If the donor is paying tax, then 20%. So this is the benefit of the inheritance tax, that whenever the gift is paid to any individual at their lifetime, you don't have to pay tax. But if the death happens, the person who gifted the asset, if that person dies within the 7 years, then they have to pay tax of 40%. But on that as well, they get the taper relief. Okay, sorry, here is a change. If a donor, I'm so sorry, if a donor is giving that asset, if the donor is paying the tax, then 20%. If the donor is paying the tax, then it is 25%. Okay. So yes, you get the taper relief on this one. You also get the annual exemption of the gift on the gift of 3,000. And this gift can also be carried forward. So if the previous year annual exemption is not used, then it will be used against the current year. Okay. And you also get the nil rate band available of 3,25,000, 25,000 pounds. Okay. And that takes, okay. So yes, everything is covered. And the next topic is in this diminution in value, the BPL. Okay, yes. Let me discuss about the diminution in value concept. I hope this is clear. If not, you can comment down below, okay? Or you can join my WhatsApp group. You can ask me that as well. Okay. Now let's understand what is the diminution in value concept. So for example, there is a building. My drawing is not good. 3, 4, and 5. 2, 3, 5. Okay. There's a building and it has 5 flats. So suppose a builder or any other person comes up to buy this building and the value is 10 crore or let's say 10 million. Okay. So which means that individual value of the house is let's say 5. 10 divided by 5 is 2 million, right? In total, the value of this home, this whole building is 10 million. But if individually this floor was sold, okay, in the building, there will be different different, house will be, size will be different, okay. But here the main point to consider is like if one or two buildings are sold, right? So after that, the value of three flats will only be 5 million. Instead, it should be 6 million, but it will be only 5 million. So, this two buildings are gifted. Okay, consider that this is a gifted. So, in IHT part, whenever you gift your part of your asset, at that time, you calculate your value of the gift value of before value and deduct before value minus after value. After DER, after value. So whatever value you get, that is your gifted portion. This is your gifted portion. Okay, only this is your gifted portion. So here, if I say 10 million was the before value and after value is 5 million. So my gifted portion is 6 million. This is how it will be calculated. So this is how diminution in value concept works. You use your decreased wealth, the value of the gifted part before and after. That's the diminution in value concept. Now there's a BPR relief, which is business property relief. Whenever there's a transfer, suppose there's a gift, a person is gifting a business property to someone else. At that time, this BPR relief is applicable. Okay? On the transfer of the only business property, there are conditions that if the gift is a quoted shares and securities of the controlling trading company, quoted shares which is listed shares. Controlling trading companies shareholding having more than 50%. So then 50% of the BPR will be applicable. You will get the 50% of the BPR. Now, if it is an unquoted shares of a trading company, then it will be 100% BPR. Okay. So quoted shares which is listed and unquoted which is non-listed. Okay. And if it is a quoted assets of the personal trading company, only personal trading company, then again 50%. And the unquoted shares of a business or the partnership, then 100%. Okay. Now, this gift relief is only is on the both UK property and non-UK properties. On both UK and the non-UK property, not on the accepted assets. Accepted assets is for the purpose of investment. You get whatever the assets you purchase for the investment, and when later you share it, you sell it, then it is not allowed. It is only available on the shares. Shares, okay? I don't know what is a glitch happening. It's only available in the shares, but in case of assets, these conditions should be satisfied. Okay. Now, if there is an uh, accepted asset, consider that there is an accepted asset given. So, to calculate the relief available, there is a formula which is value of the shares multiply company business property. So, whatever the value of the shares is. So in short, you get only benefit on the shares value. So you are taking average here. So shares divide by total assets minus total assets multiply business assets business assets. Okay, and one more thing here, if there is a postal asset gifted, so then also this whenever you use this, the business asset will be considered. Okay. Now, you have to consider the length of the ownership. Before selling an asset, you should hold that asset for at least 2 years. Okay. One thing that if the donee, suppose Nishi, let's say Nia. Okay. Nishi already satisfied 2 years shareholding on the asset. Now, if she is gifting that asset to Nia, then it's okay if Nia does not satisfy 2 years on that. Like 2 year shareholding period is only for the Nishi. If Nishi is satisfied, then if Nia wants, it's she can sell the asset. But there is also condition. The limit, the rule says Nia cannot sell the asset until I am alive. If Nia is selling the asset, then the proceeds should be used in the business itself. Okay. So according to this, if after 2 years, if Nia sells this asset, okay, and reinvests the proceeds in the business asset itself, okay, then this relief BPR is applied. Okay, within 7 years, this BPR relief is applied. So this 2 years thing you might get confused. So I hope it is clear. And yes, one more thing. For the husband and wife, they are considered for the PPR relief, they are considered as a one only. Okay, so if husband is gifting to wife and gift is wife to husband, so that is not considered, that is only considered as one. Okay, and this is a combined ownership of donor and donee is considered, yes. So combined ownership should be taken. So if 2 years are satisfied here, then yeah, it's up to you. And if 1 year is here, then 1 year is here, then also they can satisfy. Okay. Okay. So yes, now you have to do these questions for your BPR relief. And great, I have covered the diminution in value concept. So which is value before, value minus value after, value of transfer, deduction available for BPR, APR. So APR is your agriculture property relief. I'll just explain APR as well here. Okay. Because we studied BPR, so let's study APR. Let me keep here itself. Though APR is not applied in this Gail and Brad Limited, but let's do APR agriculture property relief. Okay, which and this is a business property relief. So here the same condition is 2 years should be satisfied. But here the one thing, if the agricultural land is rented to someone else, then the 7 years is considered. Okay. 7 years is also combined ownership. Okay. And 2 years is also, that should also be combined ownership. Rest of all, everything remains the same. On non-UK, UK resident, UK agriculture, it's applicable. Okay. And the length of ownership is just 2 years and 7 years. 7 years for rented. And yeah, sorry, one more thing. 2 years from the last 5 years. Same thing for this as well, which means for the BPR, sorry, I forgot this point. For example, suppose I started a business, I started coaching institute and I taught for 6 months. Then I started working, or let's say I started that it's not worth it. I started a new business to sell calculator. Okay, and let's say business that is 1.5 years, 6 months. Okay. That also didn't work. So I again went back to teaching, which is 0.5 months already covered. So I covered 1 year here. Then I thought, let's start something new. Let's start something for food. Okay. Then I started a restaurant. So that's a new business. Right. And it lasts for 1 year. Then again, it didn't work. And then I again went back to teaching. This is again, let's say 1 year. 5 years, one, 3 and 2, right? 2. Within 5 years, which business has completed 2 years? My teaching business only. So on the teaching business, I'll get the BPR relief. Okay. The same way for this agriculture property as well. So that was a point which I forgot. So yes, that's okay. So for gift holdover relief, I suggest you to watch my recording. It's already covered. You can go through that. Now let's start with the question. Okay. So yes, I have covered all the topics which are in your Gail and Brad Limited. For other relief, like which is not covered, which is like this last one, which is gift holder relief and your rollover relief. Those are already covered. So I request you to watch them. And for the questions part, please stay tuned. Please follow, subscribe so that I can, whenever I update, I upload anything, you get notification on that. Okay. So yeah, that's it. Let's do question now. Okay, so let's start with the Gail and Brad company. Sorry, it's not Gail and Brad, it's Gail and Mill. Okay, let me share the screen. Okay, so first of all, as usual, I'll read the question. Okay, now there is a way to read a question. You don't directly start reading the question. No, you have to like it's okay. You have to read this information. In exam, you will find out exhibits. Okay. So there will be exhibits and everything will be given. So you have to read this part, which we already did. Okay. So exhibits Gail provides schedule, Brad, and work to be carried out. Okay, so we have to check for this part. Fourth exhibit. IHT consequences of non-disclosure extraction for the company, the bonus or corporation tax. Okay. One more thing. Like what happens whenever you prepare, whenever you give exam, there are chances that happens that some of your topics are weak. When I say to write down your 25 marks first, and then again like if you have to choose whichever 25 marks you want to go for first, you have to check these topics first. Whichever you feel you're confident about, start with that. Whichever you feel you're a little weak at that, start it later on, right? Which makes sense, obviously. Now, let's jump to the directly to the fourth exhibit. Okay. And requirement, there will nothing will be given. So respond to the instructions. So this is only the requirement. So the main part is here. It is the marks allocation is given 40 marks and 10 marks. 10 marks is the professional marks, which demonstrate your skills in communication, analysis, evaluation, skepticism, and commercial acumen. Communication, how you are addressing it, how is your format, how like if you're addressing it to normal people, then how you are using, what language you are using. Analysis and evaluation is your calculation skills, which formula you are applying, are you applying properly, all those. Okay. And skepticism skills is being, questioning mind, with a questioning mind, in the sense, like suppose there's a statement given in the question, but if you feel that's incorrect, you have to question that. So that's the skepticism skill. And then commercial acumen is knowledge, not business knowledge and knowledge about this. Okay. In short, these are your professional skills. How much business knowledge are you applying to the rules and whatever? Here we have to apply the rules. Okay. So let's start with the that's directly. Okay, Gail from your manager, 1st June. Today's date is I have to consider 1st June itself. Gail from the manager, please prepare briefing notes to address the following issue. First one is schedule prepared by Mel. So that will be exhibit 1, exhibit 2. Okay. So in the exam, there are chances that this won't be given. Okay. So don't relax. So if there's a schedule prepared by Mel, I can confirm that there has no computational error in just in the schedule, but I suspect that Mill will have made a few technical errors. Okay, so you have to correct the errors. Please identify and explain any errors in schedule. Explain whether or not notes to the schedule are or correct, are not correct. Can calculate the correct amount of total cash available to Gail, uh, to pay Gail. The following moments of the retail price index should be used. Retail price index will be given for the index factor, okay, where necessary, from December 2012 to 2017, and from Jan 2016 to 2000, uh, okay, December 2017. Okay. And the next is payment made to Gil. Uh, that is from exhibit 1 only, you'll get it. Calculate the additional tax and the national tax NIC contributions due as reduced by any corporation tax savings if all the cash realized by A Limited is as a result of the proposed transaction 1 and 2 paid in GIL in the form of a bonus and a dividend. So you have to find out the tax savings in the corporation tax to bonus or dividend. Okay, Gail's annual income tax liability in respect of her annual salary. Her annual salary she withdraws is 85,000. A Limited is 21,432. 32. This will be her only source of income in the tax 24-25, other than the any payment received from A Limited as outlined above. Okay. Non-disclosure of income. This is your ethics part. Okay, ethics part, like you have to text me. I'll send you the document, or else you can find it from the Google. It's fine. Take out a day. Okay, I would say not even a day. It will take around 2 hours. That's it. That's that more than enough. But I'll teach you the way. How will you write and attempt the ethics questions? Okay. Okay. So this is the ethics part. You can type on the Google ACCA ethics ATX document. Whatever you find it, you that document you'll find it. So you have to open that document and read that document. And after reading that particular document, go to the 50 marks section. Go to the exam kit and open all 50 marks question. And that was 50 marks question. Read all the ethics part. So it's only for 5 marks. So it's not a too much, it's not a very big task I'm giving. So this was a day one task for my students. Okay. Uh, so yes, those who are watching this video, you guys can also do this. Fine. Okay. So yes, make sure you do that so that you'll skip your 5 marks and then move further. Okay. And the next one is inheritance tax. Explain the inheritance tax advantages of making lifetime gift to individuals in general. In respect of the possible gift of 1500 shares in Omnium Limited to Gail. Okay. Do you remember I discussed about the diminution in Coeli concept? So shares were disposed, shares possible gift, okay, and that too for IHT. So before value, after value will be considered, okay. Explain the IHT of making the lifetime gift in general in respect of the possible gift of 1500 Omnium, 1500 shares in Omnium limited to Gale. Calculate the fall in value relief. Brad estate, which will result from the gift. Okay, fall in value relief. Whenever, suppose whenever I gifted an asset to someone, at that time the value of the asset was £100. But whenever I die, okay, within 7 years, uh, that asset value has decreased. Okay, so at that time, the decreased value will be taxable. So 40% IHT will be payable at the decreased value, not the earlier £100,000 value. Okay, but this your whatever the gifted asset I've gifted at the increased value, this £100,000, at that value will reduce your nil rate band. Okay, so in short, your nil rate band will be reduced by the original value of the gift, but at the time of the death, it will be considered as a gift on the charge will be on the reduced value. Okay, so that is the fall in value relief concept. Now, provide a detailed explanation whether or not BPR relief. So yeah, see, BPR we did it right. Would be available in respect of the gift and assumption that it would be available, the manner in which it would be calculated. State briefly any other tax issues arising from the gift which will need to be considered at a later date. Tax manager, 8 marks. You should assume today's date is respond to the instructions of the email of the manager. Okay, all right. One more thing. It's very important to know this. How will you in exam do that? I recommend to just a second. Let me share a key sorry, this whiteboard. Mm, okay. So consider this key whiteboard as your exam platform. Okay. In exam, there will be exhibits given. There will be oh, just a second. Okay. First thing, in exam, there will be exhibits given here. Here you will have exhibits information, and here you will have company information or whatever the information which I before starting the video, if you remember at the start of the video, whatever the information I've gone through, or these are the exhibits and this is the information here available. And in the exam, just a second. Okay, so this is how your paper is gonna be. Now, how will you there's a technique to half part word file. So whenever you solve mock papers, you have to follow this. This is really helpful. And half part your Excel sheet or spreadsheet. Okay, the reason why I'm showing you this, because for 50 marks question you cannot copy the whole requirement and part and paste in Word file. No, you have to go through one thing again and again, and if you keep opening the exhibits again and again, it will waste a lot of your time. So try to minimize as small as it is possible your question requirement thing. Exhibit 4, this will be your exhibit 4 for 50 marks question. Okay, I'm being very clear. And whatever the exhibit is required. So if you are trying, if you open the exhibit, so for if you here you'll find, so see, according to this, here this will be your here you'll find out the exhibits. Here there will be exhibits. So here you'll open whatever the required exhibit is. Okay, don't get confused. Don't open this exhibit all over your screen and later on close this one. No, don't do that. Please be like very quick and save your time. And whatever you have to copy, one thing, Control Shift CTRL. Sorry for the spelling. Shift plus V. Okay. So whatever you do copy, please do Control Shift V, Control C and Control Shift V. The reason is whatever format you are following here, that will directly be pasted. Okay. So that's one thing. So in case you are, if you solve this question, on your mock paper or your on your CB practice platform, then please follow this format. Okay, so yeah, that's all. Now let's start with the solving, understanding. So first thing, see, this happens, you have to go through that once again. So first thing I have to prepare is the errors. Okay, okay, from the exhibit 1, extract from the memorandum prepared by your manager dated 1st June 2024. Gail, background, Gail was born 1976 and is a resident and domiciled in UK, and she owns the whole of the ordinary share of Aero Limited in the and full time as a director of the company. Okay. Uh, E Limited owns the whole ordinary shares of Zephyr Limited. E Limited and Z Limited are both UK resident trading companies. E Limited and Z Limited both pay corporation tax at a main rate, 25%. That is your main rate, right? So tax rate is already given. So you have to be smart in this. Now, historical transactions in respect of the E Limited and Z Limited. All transactions took place at the market value. At 1st Jan 2016, E Limited acquired the whole ordinary shares of Z Limited for 180,000. Okay. On 1st October 2020, E Limited sold a building to the Simpson building to Z Limited. Okay. E Limited acquired Z Limited whole ordinary share. So one thing, this is 100% shareholding. Okay. So what you have to do, take a scratch paper in exam. You will be given in CB platform. If you go for the centerpiece, you will be given. Just note down this, I mean the holding percentage on all. Okay. And this one. This is the important part. And the date acquired is 16th Jan 1st, 2016. On 1st October 2020, A Limited sold a building. So A Limited sold building, Simpson building to Z for this much. A Limited had purchased this building for 75,000. So see, here it is a profit. It is sold at a profit. So that's a mistake. That's a point which I am highlighting it right now. Okay. This is the cost. Cost plus indexation, that is your formula. Okay. On 1st March, October, November, December, Jan, Feb, March. Within 2.5 years, A Limited sold a brand to Z Limited for 7 lakh of 170,000. Its market value at this time was 230. A Limited had purchased this brand for 115,000 pounds on 1st June 2018. Okay, so it was purchased on 1st June 2018. The brand was sold on Z Limited. Okay. Now, proposed transaction, all transaction will take place at a market rate. Gail Limited intends to raise a substantial sum of money carrying out the following transaction. On 24th June 2024, Z Limited will sell the Simpson building to unrelated purchaser for 140,000. Rollover relief will not be claimed in respect of this disposal. The reason why it is saying, because in the question they are directly giving you the assumption that whether they are using it, whether the amount is reinvested, your rollover relief is only applicable when you reinvest the proceeds. Okay? So yes, if you are selling this to the outsider, at that time, whatever the gain you get, you will charge that gain. Okay. On 1st July 2024, A Limited will sell whole of the ordinary share of Z Limited for 250,000. 1st July 2024. Okay, look at the dates. It is more than it's more than 6 years, right? Okay, now I'm jumping onto this. If you remember, my okay, degrouping charge part. See, I know the rules. I remember the rules, right? So that's why my mind is directly thinking about the rules. That's what I say. If you are at this situation, you're good for ATX. You are good to go. If you're not, you need revision. Okay? Genuinely, you need to revise the things. Even if it's your reattempt, and if you feel you don't know the topics, you have to go through the rules again. And that too very well. Okay? Now see, on 1st October 2020, this Simpson building was sold on 1st, okay, so anyways, that was that bad date, sorry. Yes, so this and this both don't have haven't completed 6 years. So what if the degrouping charges? So in the degrouping charge, what if the gain which was not chargeable at that time will be chargeable now? 110 minus 75. So what if the gain is that will be chargeable now? Okay. So yeah, sorry, one more thing. It will also consider this indexation allowance. Okay, so on 15 July 2024, all cash realized by E Limit as a result of transaction 1 and 2 will be paid to Will in the form of either dividend or bonus. Okay, again, you'll have to see the cash, how you have to do this, okay? Which is a beneficial you have to choose. Non-disclosure of the income. So this is your ethics part. Gail Limited has realized that she has not declared some of the income in the rest of the year. As a result, her income tax liability for the tax year was understated. I have already explained the interest and the penalties which may be in respect of this error. So this is ethics part. You will get it once you do ethics. So I have to find out the mistakes in this part. So what I'll do, I'll read the exhibit wise. No, there is no meaning if you read all the exhibit and then again get confused and again you go back to the requirement and again feel like, oh, what was asked? So better go point wise, right? Cash was a, so I'll need this. Cash will be available to pay together as a result of proposed transaction. Just have a look at it. Sale of Simpson building, sales proceeds minus cost. Cost plus indexation. Okay, see, here the problem is indexation is freezed after 31st December 2017. So here the indexation factor is incorrect. The on indexation factor will only be considered on up to 2017. Okay, chargeable gain, corporation tax, post tax proceeds, Aero Limited. I do not think there will be a chargeable gain on sale of the Zephyr Limited due to the substantial shareholding exemption. Here, if you feel there is a gain available, then if you apply that, that's your skepticism skills. Okay. I think there will be a degrouping charge in respect of the brand, but I don't know how to compute it. Okay, so in short, we have to compute it. One more thing I want you to notice is, I'm just reading the exhibit 1 and 2. That's all. I'm not reading anything again. Because I am not the one who will remember everything in one go. And it's fine if you don't. So we are same. Okay? You see here. Schedule. Please identify and explain any errors in the schedule. Explain whether or not the notes to the schedule are correct. So that is third requirement, right? 1, 2, and calculate the correct amount of the total cash payable to the. See, now in this requirement, you have to explain and calculate. So this requirement includes both, right? This requirements includes solution part, calculation part, and your writing part, typing part is okay. Let's start with the solution. Mm, Second. So yeah, that's a good thing which I did. What are the topics discussed here? And I have also written the answer, okay, to save some time. All right. Okay. So first of all, whenever you start your paper, make a format. How I do in my exam, briefing paper, whatever the examiner is asking, please give a big, big, big handwriting, like highlighted part. Okay. Briefing paper. This is briefing paper. To in you can choose H1 in the ACCA, okay, exam. To client subject, whatever the format is. Now this briefing paper, now I want to share my another screen. Just a second. Okay, all right. See. Now how I did the same way. Control Shift V. This briefing paper discuss about the corporation tax issues in the relation to the disposal of the building. Okay. See this. This briefing about corporation tax issues. If you read this, everything is same. I just copied and pasted. Control Shift V. You have to be smart, okay? You cannot be typing everything. Then congratulations, you will waste a lot of your time, and towards the end you will miss out 10-15 marks. So be very smart. Wherever it's okay to copy it. Don't worry about anything else. See that later on. Okay. So now one thing again. What will I do? How I start my paper? A part, okay, just paste the headline, okay, copy paste, copy paste, and leave like the leave space like this. And towards the end, I might have written C, okay, towards the end. So why I'm saying this also gives communication marks, right? So in case you don't have the time at the end, and if you forget this, you lose marks. Okay, so yes, that's all. Now let's see about this one. I need exhibit 1. Okay. So first thing I need to check. The chargeable gain on the sale of this Simpson building is not correct. Okay. Uh, First of all, just a second. Hmm. So I'll calculate it now first. a second. Gail and Brad Limited. Okay. Gail and Mill. Gail and Mill. It's just Gail and Mill. Okay. So here, please state your requirement very carefully. Here, I am writing 1A, A1, A1. Okay. Or 1A, fine. Okay. Or just A is fine. Okay. Gain on the Simpson building. A1, I'll write A1. Okay. So first of all, I'll write sale of the Simpson building. I have to find out the gain, right? One more thing. Alter key on your left hand side, and this shortcut will only work if you have extra extra column for numeric. Alter key, I'm pressing my alter key 156, your shortcut. Alter key 156. Alter key 156. Okay, if the question was in euros, if the question you have euros, there is a shortcut alter 0128. You'll get euros. Okay, please remember these shortcuts. Okay, I also send this in my WhatsApp groups. Okay, so whatever the sales proceeds are from the question itself. I'm doing. I'm nothing doing extra. I'm not doing anything. See, sales proceeds of 110. This one is my sales proceeds. I'm just correcting it, doing it in very layman's way, right? Easy. This is the basic. Now, less cost. Cost, now whatever the cost, it was for A Limited, because this is the part of the group A Limited. Okay. Now, cost for the A Limited will be cost plus indexation allowance. So A Limited purchased this building for 75,000, and indexation allowance will only be up till your this period, 2017. Where is it? Somewhere it was given. This one. You'll take this one. Okay, you'll take from December 2012 to December 2017. Why not Jan 2016 to December 2017? Because on Jan 2016, there's something else happening in the business. Yes, they purchased the ordinary share capital for this, but you have the indexation allowance will be from the date the person has bought. For example, suppose your inflation starts from the day you purchase, right? Your value of the asset, suppose I purchased a home. Due to inflation, the day I purchased my home, from that day my value will be inflated, right? And whenever I get into the group, that will be a different thing. So that's where the indexation allowance will be considered from your date you purchase, or the person who is transferring, or the company which is transferring, that day she company does, that will be considered. So what was that? 0.127 minus, sorry, add, okay, my equals to, sorry, 0. In exam it doesn't work, so keep equals to 0.127 multiply this one. Okay, so this is the value at what your cost was, at what Z Limited got. That's it. Okay, So A Limited transferred to Z Limited. Okay. Cost for Z Limited was again only this one. Okay. So now see what's the gain is. It is 55,475. So this is your gain. Now on this chargeable gain, what is the corporation tax? Corporation tax. How I got it corporation tax rate? If you remember, there was a main rate given. If here it is given. Both are the main rate. So don't have to worry about the marginal rate or everything. You just write it down. Okay, one more confusion many students will have, that capital gain is always having a different format and a different tax rate. Then why here corporation tax will be paid? Because this is a company's tax. Company's tax is same for the income and the gain. Okay. So yes, I'm right now trying to, sum up all the queries which I get regularly, so that those who watch this video gets a clear understanding, okay, what I have to do. So yeah, that's all. So yeah, 0.25. This will be your uh, corporation tax liability. And what is the sales proceeds? Sales proceeds minus this one. Okay. This will be your sales proceed. Okay. Now let me see. Wait just a second. There's also a sale of something else was also happening, right? Purchase a sale of the brand. It was okay. Here it is. Z Limited will pay a dividend to A Limited equal to the post-tax proceeds of this sale. Okay, so sales proceed, and this is also dividend payable to A Limited. Now tell me, wasn't this basic sales proceed minus cost, and just the difference is cost? But in exam, that's why I tell you, please solve exam kit, because if you solve exam kit, you'll get it that there is a difference in language. They are making it difficult, but it's not difficult. ATX is easy. Okay, now to this, you will also add the sales proceeds, whatever sale of sales proceeds from whatever sale of is Z Limited shares, sale of Z Limited. Okay, sales proceeds, that will be 25 times 0. This will be your this amount. Okay. 376,131. So this is the total cash available to Gail Limited. Total cash available to Gail Limited. Okay. Now main part. That's all. We are done with the. Okay. Now see this. I've solved this. Now how will you write your answer? Now whatever the schedule, whatever the mistakes you found out, the chargeable gain is incorrect. So this is where your skepticism skill is tested. Okay. So the chargeable gain is correct. The sale of the building. See, I'm writing in a very normal language. The chargeable gain on the sale of the Simpson building is not correct. The sale of the building on 1st October 2020 will be at no gain, no loss, because Aero Limited and Zephyr Limited, Z Limited were in a capital gains group of 75%, owns at least 75%. Okay. See, on 1st October 2020. Okay. Therefore, okay. Here it is. I'm just explaining whatever I used knowledge. And one more thing. Whenever I ask you to make your self-made notes, do this. No gain, no loss. Degrouping charge. You'll understand here. Therefore, the cost of Z Limited will be cost plus indexation only till December 2017. See, cost plus indexation. Where is it? Cost plus indexation. It's just the rule I have to write and to add some explanation for the company. That's it. Okay, so this is how you will attempt your exam kit as well. Therefore, cost for Z Limited will be cost plus indexation. The post-tax proceeds and the sale of Simpson building sales proceed that is not chargeable, not the chargeable gain, less the related corporation tax liability. As dividend income for the companies is exempt from the corporation tax, therefore, the dividend from Z Limited will be exempt for the A Limited. Okay, you have to mention that as well. SSC is available when okay, see this. Check whether the substantial shareholding exemption is available or not. Yes, it is available. You have to think of SSC whenever there is a sale of shares. Okay, SSC is available. So here, due to the ordinary shares, SSC is available. SSC is available when the sale of shares or another trading company has the shareholding of minimum 10 in the last 12 out of 6 years. Here, Z Limited is selling the trading company and E Limited held a whole ordinary share from 1st in 2016 in A Limited. Okay, see this SSC. Everything is same. There's no difference. I've just summed up the rules and written that in 1-2 lines. Okay. And the next one is usually degrouping charge will be arise when the company is sold within 6 years of the transfer of the asset. But here SSC degrouping charge due to SSC the degrouping charge will not arise on the gain. Okay, because the purchase was at 180,000, but the sell was is at 250,000 pounds. Okay, so therefore there's no gain because the 100% shareholding is there. So 10% shareholding is already satisfied, and this is more than 6 years now. Okay, so yes, and one more thing for calculation part. See this, how I want, like how it is easy to do. How I did. Don't make a table and write, or don't write in the Excel this word file. Make a calculation column in Excel. Solve your everything in Excel sheet on spreadsheet, and then please name it carefully. See, for calculation, refer to the spreadsheet question 1A. Have question 1A. Okay. So the examiner will find it, will find the way. Okay. So that is how you will solve your exam kit as well. Okay. Now let's do for the B part. B part. That's all with the A part. Question 11 marks is done. Now calculate the additional tax savings, the tax and national insurance contribution due as reduced by corporation tax saving if all cash realized by A Limited as a result of the proposed transaction 1 and 2 is paid to GIL in the form of bonus, a dividend. Okay. GIL Limited annual income is 85,000. Okay. So which makes it additional rate taxpayer. Okay, sorry. The company will be normally. Just a second. Okay, this will be only her source of income. Okay, sorry. My bad. Gail, Gail's annual income. So this is Gail's annual income, not limited. So it's 85,000, which is high rate tax, additional rate taxpayer. No, high rate taxpayer, right? And A limited is this will be the only source of income 24-25, and the payments received is outlined. Okay. So again, exhibit 1. So how much is the bonus amount? Where is the bonus amount written? Okay. So instead of this amount, like here the bonus amount is not given. They are considering, like it is considered. Let's read the question once again. This happens in the exam as well. I've taken directly this question and following. Okay. If all cash, if all cash realized by A limited result of proposed transaction will be paid to Gail in the form of bonus or the dividend. So yeah, if you don't read the question, this might also happen to you. Okay. So what is the cash received? This much? Okay. So now my B part. Hmm. So as per the note, if you remember the solution part, if the payment is a bonus, is payment or the bonus payment. Okay. What is the annual income? Annual income of Gil is 85,000. Bonus. Bonus will be 376131. Okay. Okay. So this is post income, net income. So yes, your net income is exceeding 100,000 pounds. So that's why your personal allowance will be zero. You have no need to check for the personal allowance. There's a shortcut as well. See, 12570 multiplied 2. So if your personal allowance is 100,000 pounds plus this one, then anyways you'll do the personal allowance review and deduct this personal allowance. That's how you do, right? So you get it directly. That's why you'll not get the personal allowance. Okay, 25140. Okay, so the same thing. Okay, this is the personal allowance, and therefore your taxable income. This one will be your taxable income. If you pay the bonus, this is considered as a non-saving income again. Okay. Now, from this, you have to calculate the tax. You have to calculate the tax and also NIC 37700, 20% tax. Okay. 125140 is the limit. You can find this on the tax rate sheet. 20%. Control D. Control D won't work on your the CV platform. Okay. So yes, you have to copy this one and paste. You can do that. That's fine. Okay. This minus this minus this. This is at 45%. Okay. This is your tax liability. This is your tax liability. Now, okay. So yeah, now let's start with the NAC calculation. We got the, okay, sorry. Before we start with the NAC, there is one line. Yields annual income tax liability. In respect of our annual salary, this is the annual salary and this is the income tax liability which is already given. So if I deduct this 21432, I directly got whatever is extra, which is due to 85,000, right? Due to, sorry, the bonus which I received. So additional tax due to bonus. Okay. Now let's calculate the NIC calculation. So for NIC, one thing is very clear that this is a high rate payer, taxpayer. Okay. So employer NIC, employer NIC. First of all, calculate employer NIC. Then additional NIC, additional NIC payable employer NIC. Okay. What is my additional bonus? 377,377,6131. This is my amount. NIC rate for the employee, it is 2%, right? Because it's an additional rate taxpayer. And for the employers, it is 13.8%. Or else, I did this, or else you can copy, paste the same way. Okay. Okay, see, this is the NIC. Okay, this is the NIC you got. Now there's one more thing happening, reduction, because this is an employment income. And employment income is an allowable expense for the corporation tax. Reduction in CT. So, first thing, what is the bonus you gave? That is allowable. So, better minus. What was the bonus? This one. Plus, whatever you NAC paid, employer NIC paid. Only that is allowable. So 0.25. This is the benefit you. So the total is this one, this one, this one. This is the total tax payable, or total payable whenever you pay as a bonus. Okay. Additional taxes payable. Additional taxes payable. Bonuses payable. Okay. Now the next one will be for as you if you pay it as a debit. So yes, everything will be the same. Let me copy. There will be some difference on it. So here there will be also dividend income. Okay. So here instead it will be dividend. Here it will be again, my personal allowance will be 0. The reason for this is because my net income will be exceeding now 85,000 plus dividend income. This will be my net income. Again, my personal allowance will be 0. But I'll get the benefit here. I'm a higher rate taxpayer. My dividend will be okay. So this one, this 20,000 correct. This one, the value will be 85,000, which is not incorrect. So there is dividend nil rate ban available irrespective of any ban. Okay. And C. what's the count? 86 up till 140. It's a higher rate when, so I'm allowed for that. But my dividend rate will be less. It is 33.75. Okay. Now, whatever is the extra, which is total income is it's 39.35. You will find it in the tax rate sheet only. Okay. So this is the tax liability. This is the tax liability which I deducted the same way. And this is additional tax due to bonus. Now see, compare which one is better. Dividend is better, right? Okay. There will be no NIC contribution. You can write here as well if you want. And you can write in the Word file as well. Okay. But yes, here it was only for the calculation part asked. So right here itself that dividend, there is no NIC payable. And no benefit for the corporation tax. Okay. So yeah, that's it. Um, hmm. So yes, that's it with this question. Now let's see which one is the next part. Okay, it is IHT. Now you have to explain and then you have to do. So for the explanation part, I have not written this one. Okay, this is okay, yes, I have written all this explain the inheritance advantages available. So advantages is lifetime gift into the individuals, which is potentially exempt transfer. Okay, one thing, whenever this is what I've written, but whenever you prepare, I want to let you know, like, what point you have to ensure to write. First thing, see this. These are the highlighted points. So whenever you prepare, please make sure you use these words. Okay? Lifetime gift available to a lifetime gift available to individual that is potentially exempt transfer. If donor dies within 7 years, then 40% is people. If you remember, I have explained this everything. You have to read this. Taper relief is also available. Taper relief will increase if the number of years are increasing between death and gift are more. Okay, more till 3 years it is 0. So yes, you have to read it, and there will be fall in value relief. I also explained this one. Okay, if the asset falls its value, then there is a fall in value relief available. Um, okay, so yes, that's all. Now, okay, so yes, till now we have done the whole question. Okay, so we are with the D part second requirement. In this, in respect of the possible gift of 1500 shares in Omnium Limited to Gail, Omnium Limited, Omnium Limited to Gail, calculate the fall-in value of the Brad's estate, which will result from the gift. Okay, so you have to calculate the fall-in value relief. Okay, provide a detailed explanation of whether or not the BPR relief would be available in respect of the gift and the assumption that it would be available, the manner in which it would be calculated. Okay, so we discussed the BPR relief, we discussed the whole BPR. In fact, the APR relief also I have discussed. Okay, this one, here it is, right? Uh, uh, um, this one, okay? Okay. And state briefly any other tax issues arising from the gift which will need to be considered at the later date. Okay. All right. And this is from the exhibit 3. Remember in the question in the exam, it's possible that they might not give exhibit numbers. You have to read the exhibit carefully. You have to read everything carefully. Okay. And then you can go on that. Extract from a memorandum prepared by your manager dated 1st June 2024. Brad, background, Gail's father Brad, 70-year-old and is married to Laura. He is a UK, he has always been UK domicile. Inheritance tax planning, okay. Brad's estate is worth approximately 5 million. It is that estate. He has not made any lifetime gift. And in his will, he intends to leave half of his estate to his daughter, Gail, and other half to his wife, Laura. So 5,000 divided by 2, 2.5 million, sorry, 5 million divided by 2, 2.5 million to Laura, 2.5 million to wife. I pointed out that it may be advantageous to make a lifetime gift to Gail. Brad agreed to consider giving Gail 1,500 shares of his own uh, shares in Omnium Limited and his and has sorry, just a second, I need to maximize this. Okay. And has asked for a general summary of the inheritance tax advantages for making lifetime gift of it to the individuals. Omnium Limited is an unquoted company. Unquoted, okay. Do you remember the BPR relief rules? Unquoted trading company. See, as soon as you read this, gift of shares of an unquoted trading company, then you have to think about the BPR relief. Unquoted shares 100%. Okay. Brad was given his shares to the in the company by his wife, and on 1st Jan 2020, the ownership of the share capital of Omnium Limited is set out below. Please highlight some points. Whenever you read, please highlight it, keep highlighting it, okay, so that you can just take up the values. 5 million is the debt estate, half to daughter and other half to wife. Okay. Okay. Laura is Brad's wife. 4,500. Brad 3,000. Vic, Laura's brother 1,500. Christine, friend of Laura, which is 1,000. Total shareholding is 10,000. The current estimated value of the shares in Omnium Limited is set out below. Okay. Up to 25% shareholding of the person after the gift. Okay. Shareholding will be considered from this part. Okay. All right. So up to 25%, 190 will be share price. According to the holding percentage, the share price will be there. So in this diminution in value concept, you have to consider the related parties shareholding as well. Related party is your wife, the spouse. Okay. So you have to consider the shareholding of your spouse as well. Okay. 26 to 50 to 05, 51 to 60 to 40, 61 to 74 to 5 to 55, 75 to 80, 290, more than 80%, 300. Okay. Let's solve the question direct. Okay. Just give me a second. What was the heading? Calculate the fall in value relief. So yes, as I told you, please name it correctly. The fall in value relief. Fall in value of of Brad's estate. Okay. Here in the question, calculate, provide explanation, state briefly. So in short, it is asking both calculation and the explanation as well. Okay. Okay. So for fall in value relief, you have to calculate take the before value, before the sharehold, before gifting and after gifting. Okay. So value of the shares, value of the shares shares before gift, value of the shares after gift. Okay. Now for the shareholding percentage, here you'll solve two types, like you'll solve in a two-way, okay, because you have to maximize the fall in value release. Like as much your value of the asset is falling at the time of the death or in the estate, it's more better. It's better, right? Sorry, not more better. It's that better. Okay. So here, first thing, 1500 shares. So gift is shares, share price to 300, 3000, sorry. 3000 is the share price. Shares, okay? So here you have to consider Laura and Brad, both of them shareholding. So related shareholding of Laura and Brad. What is the shareholding? 4500 shares plus this 4500 shares plus your Brad's shares 3000, 7500, right? Divide by 10,000. This is your shareholding percentage. Connected party, related party. This is your shareholding percentage of Brad is 33,000, sorry, 3,000. But for calculating the market value, the related party is considered. If you remember, for BPR, for APR, and for many relief, husband and wife are considered one. That's why, okay? So what is the 75%? 290. Okay. So therefore, I'll multiply by 290. And now how much shares are now? 15,000. Again, shareholding after the gift. How much? Laura's gifts will be the same. 4,500, 1,500 divided by 10,000. Is it 60%? 60%, 0.6 is 60, right? Okay. So your share price will be which one? 240. Okay. 240. You have to deduct this. So this is your value of the gift. Total value of the gift. Okay. Now, this was the consideration we did from related party. Now let's consider without a related party. Okay. Without, in case you ignore the related party, same, everything will be same. Okay. 3,000 shares, but the shareholding will be only of uh, Brad, not Laura. Okay. Shareholding before gift. Shareholding after gift. Remove Laura's part. This is 1,500 divided by 10,000. Check what is the value. 205, 15%, 190. Okay, I'll just change the values. Before gift, it was 205, it's now 190. Okay, so this is the value of the gift. Now, current value of the gift. Okay, so the higher, this one is the higher fallen value relief. So this is the highest value of the asset which is fallen. Okay, so therefore we'll consider this only. So for the fallen value relief, this relief will be considered. Okay. Now let's see for the business property relief. Okay, what are the points we need to consider for business property relief? What I'll do, I'll see. These are the rules. Okay, just see whether everything is applied or not. I'm opening the answer. BPR relief will, because I cannot type everything, so I'm just showing how whenever you prepare your uh, exam kit, how you should see. Read the rules, read the question, and see whether everything is applied. BPR relief will not be available if the business of Omnium Limited consists wholly or mainly dealing in security stock or shares or land and building or the making of the holding investment. Accordingly, it will necessary to determine the nature of Omnium Limited's activities. Okay. Actually, BPR relief is only available on the trading companies, unquoted shares and trading companies. So that's what it is, because it is only dealing in shares, security stocks, okay, land. Brad must have owned the asset for at least 2 years at the time of the gift. That is, if, okay, see here that the rule is at least 2 years. Owned for more than 2 years. Okay. Business property relief will not be available unless Gail still owned the shares at the time of the Brad's death or died while owning the shares, and the shares continue to qualify for the relief. So yes, the same thing. If Gail sells the gift, okay, whatever the gift he received before death of Brad, then this relief is not available. There's one condition, that if he reinvests, then only it is available. Okay. If all the conditions set out above are satisfied, BPR relief will be available at the rate of 100 because Omnium Limited is a unquoted company. See this, unquoted shares and securities trading company. So one more thing. These are the highlighted points. You need to like make your answer good. Examiner is looking for these points. They don't get a separate fixed answer. They don't go like this. They look out for the keywords. So these are the keywords. So whenever you read your rules, please try to improve your language by reading or trying to remembering how they are using the words, how they are explaining it. Okay. It's not possible to remember all the things, but yes, you can improve your language. Suppose, see how they are writing it. And one more thing, see that if BPR relief is asked, what are the points they need to find it in the question. Okay, so you have to check everything. Now, another tax issue was the gift of shares will be disposal at a market value for the Gale for the purpose of capital gain tax. Gift holdover relief will be available if Omnium Limited is a trading company. Gift of shares are not subject to stamp duty. Okay. So whatever the gift of shares is, that is not subject to stamp duty. And on the gift, you get the holdover relief, gift holdover relief as well. Okay. So yes, that's it. Just a second. One more thing. I'm so sorry. Yes, these are the points given. ACCA marking schemes. Okay, so you need to check this. Whenever you do questions, please have a look at all these things, which will help you to improve marks. And whenever I say practice questions, read the rules, solve the solution part if you don't have time. Okay, but I would suggest you to give time. Okay, solve the solution part in your Excel sheet. Make sure that you know the formats, you know the formula and everything. And for the theory portion, read the rules, remember the rules, and see and like try to apply. Like whenever I read the question, I know what rules will be applied. I know what will happen next. That's because I know the rules. I know the ATX, whatever the syllabus is. Now you should be able to apply the rules. You should be able to do things in mind. So if you do like make a mind map, like if BPR relief is, I have to apply BPR relief, 100% unquoted company shares. If it's unquoted company, 100% relief I'll get. It should be trading company. It should be holding period should be 2 years. Uh, uh, Before that, all are the rules which you have to like revise. Okay, so this is how you will be able to cover up your exam kit. And I hope I've shown you like how to write your exam kit questions, or how to appear for the uh exam. Okay, and how to apply the rules. And for more such videos, please follow me. Please like, share, subscribe. And in case you need any other help, so this video was requested from some of the students. So in case you need any other help, you can reach out to me. You can ask me. Okay. So yeah, that's it. And yeah, one more thing. All the questions I'll post it on my community channel, and in my WhatsApp groups. I keep sharing daily task. Okay, like you have to complete this today. Take this for 2 days. So if you want to join that group, you can also join that group. Okay. Uh, you can follow me on LinkedIn as well. I'm available everywhere. You can reach out to me in case you need help. So yeah, that's it. For questions, I'll again let you know that I'll post it on your community in the community part. Okay. So yeah, thank you so much. Bye. Have a good day.